Good morning, students. I trust that you are all well. All right. One of the key requirements of the design of accounting information systems is that there should be measures or mechanisms put in place to protect the assets and other resources of the organization, especially the data that is processed to generate information for users. So, because without any system of controls that will protect your assets and other resources, then you are exposed to risk, especially and other bombardments. So internal controls actually is like a shield. You see, that protects the organization's assets from all bombardments and risk. Although we cannot have 100% control, but that will reduce the risk to a significant amount. Okay, so today we want to look at internal controls. And internal controls, they are in two sections. So we have internal control 1 for lecture 8, and then we'll look at internal controls 2 for lecture 9. All right, so we have 5 key objectives to achieve in this lecture. But before we do that, what is internal controls? Internal controls actually constitutes the policies, the rules, regulations, and the processes that are implemented to provide reasonable assurance. You see, I said reasonable assurance, because we cannot obtain or complete assurance is impossible to achieve. This is because internal controls are also, there are some inherent risk or limitations in internal controls. For example, the whole system is susceptible to errors, simple errors and mistakes. And there can also be wrong decisions and wrong judgments from management. And even there can be collusions, you see, and management override. All these are some of the limitations of internal control. So actually, when we are designing internal controls, we are not saying that we want a perfect or a complete internal controls, right? So it provides reasonable assurance that the organization's internal controls may be achieved or can be achieved. That is the objectives of the organization's internal controls. So what are these objectives? The first objective can be that is the protection against assets, the organization's assets and other resources, in protection against unauthorized acquisition, unauthorized usage, and unauthorized disposal of assets. That is why most organizations, we have what we call procurement regulations or procurement acts if we go to the public sector. So in the public sector, you cannot just procure any assets. There must be the need for that procurement, and of course, it has to go through the due process. It has to go through due process. And all private organizations also have system of procurement of assets and other resources, you see. Then the usage of assets. You cannot just stand up and be using organizations' assets anyhow, as we have been seeing on the environment. Look at the way government vehicles are used, especially when you have a funeral and other occasions, other events. You just, use these assets anyhow. No. And the disposal, you see. So these are very important when for every organization, because it is the assets that has been entrusted into the care of management. And management is accountable to owners, shareholders, in terms of how the assets are being used. You see, so we normally say that the assets, this word, they have been kept under in the custody of the of management, right? There's a word I've forgotten when I remember. Okay. The other objective could also be that we have to maintain records in sufficient detail, you see, to report the organization's assets more accurately and then fairly. Because, as I said, management is supposed to report to owners, or management is accountable to owners as the law demands. So, reporting about the usage of assets to generate revenue must be what? Accurate. It cannot be perfect or 100% accurate, but at least it must fall in line with, or it must reflect on the current situation of the organization. Then also, management must comply with applicable laws and what? Regulations. And that is one of the objectives of internal controls, to ensure that management will comply with applicable laws and regulations. And also, to enable management to adhere to prescribe managerial policies. You see, management must adhere to their policies. And there are a lot of them. Prepare financial reports in accordance with established laws or criteria. So financial reporting must fall in line with adopted standards. For example, Ghana has adopted the IFRS, and also the IFRS for small and medium businesses that have also been adopted in 2009. So in preparing financial statements that are sent to users, which of course they are the owners of the entity, then these statements must fall in line. It must be within the regulatory framework of financial reporting. And in the design of internal controls is to ensure that these have been achieved, right? So these are some of the objectives of internal control. And every organization would like to achieve these objectives. Now, take note that internal control is an integral part of management activities, as I've said. All right, so let's go on to the slides. Now, our first objective is to explain the principle of corporate governance in Ghana. Now, you know that internal controls, internal audit, they are the tools or the underlying basis for corporate governance. So if your internal control system is weak, if you don't have proper internal audit system, then you're going to have poor or weak corporate governance. So that is why we have to explain some of the corporate governance practices in Ghana, right? We'll come to that. Then we need to explain the importance of information technology governance, IT governance. Now, IT governance actually is a subset of corporate governance, because IT has been a component of organizations' activities. These days, almost every organization uses IT, right, in order to enhance performance, especially when you are talking about speed. We know the functions of the AIs, that it has a lot of advantages as compared to the manual system. If you have a computerized accounting, you can process large data at a very fast rate, and you can also have more security controls compared to when you are using the manual system. So every organization is using IT. So if every organization is using IT, then there should be what we call IT governance, because if the usage of the IT, it also has to do with resources. You see, for example, in the manual AIS, one of the control measures is about segregation of duties. You need to segregate somebody who authorizes a transaction from somebody who processes the transaction. You see, especially transactions that are incompatible must be segregated. But when you come to the IT environment, just an application will process all. You see, will process for authorization, will also institute the processing itself, and will provide the information or what is being required of the transaction. You see, so there should be an IT governance, which actually is a subset of corporate governance. And again, you see, this IT governance came into being when we experienced these scandals across the world. For example, Enron, Wellcome and Co. That was around the late 2000s, right? So the Sarbanes-Oxley Act, I'm sure you all know the Sarbanes-Oxley Act, which was promulgated in 2002, actually came out with some frameworks, regulatory frameworks for IT. And one of them is the COBIT, that is Control Objective for Information and Related Technology. That is a short for it is the COBIT. And it has been upgraded to COBIT 5. So we need to know what the COBIT 5 is all about, and then we will then link it to the lecture. So summarize the principles of COBIT 5, and then again explain the significance of IT controls. You see, so we have internal controls, and then we have IT controls, which also is a subset of internal controls. So normally when an organization is performing an internal audit, it is expected that it also perform an internal audit for the IT, right? So that is something that can be researched to actually determine or examine the time that has been allocated for IT controls out of the actual internal control system. Okay, then finally, we also look at another framework, which is the Committee of Sponsoring Organizations for the Tradeway Commission, that is the COSO Internal Control Framework. And this control framework has 5 components, right, which we'll be looking at. Okay, so like I was saying, the internal control is an integral part of management activity, and it provides reasonable assurance. And we know that complete assurance is difficult to achieve, and even is prohibitively expensive, right? It's quite prohibitive. So, because the control system has inherent limitations, and I've already explained that. Okay, so management or the design, internal control system designers or system designers and accountants, they can contribute to having internal control system that is highly reasonable, or you can highly rely on. Right, so accountants and system developers, they help management achieve their control objectives. So you are an accountant as you sit here, and then a system developer. You are the two guys who are to help management achieve their control objective, because you are going to design, put in place the measures. So they can do that by 2 ways. First, they can achieve that by designing an effective control system that takes a proactive approach, right, for eliminating systems threats. As I said, the internal control is like a shield that protects the organization's assets or resources from bombardments, you see, and threats and other risks. So you can actually help management achieve their internal control system by designing an effective control system that will take a proactive measure in eliminating system threats when they occur, right? And you can also, normally system designers will help these to be achieved by incorporating these control systems from the design stage, you see, and not after the system has been designed before you bring in your control measures. That is not effective, right? So let's look at the first objective. Now, in this lecture, we say that internal controls in the context of corporate governance, internal controls in the context of corporate governance. So our focus this week is on some of the concepts about the structure and operation of corporate governance and internal controls. As I've already said, internal controls, internal audits are the basis for good corporate governance. So if your internal control system is weak, you don't have proper internal audit system, then you're bound to have weak corporate governance systems. So the role of these structures is to facilitate the checking to determine if the goals and objectives are being achieved. Every organization has a goal, whether it's profit-oriented or non-profit oriented. So auditing actually happens in every organization. So every organization is supposed to have an internal audit for ensuring that the objectives of the organization are met or are achieved. And this can be done when you have instituted proper internal control system, which is being strictly adhered to by all management. And then part of this involves checking that the right things are done or are being done within the organization. For example, corporate governance in Ghana prescribes mandatory disclosure obligations, you see, for issues of listed securities. Some securities that are listed, especially, so we are talking about companies that are listed on the stock exchange. And then rules on board governance, rules that govern board governance and practices, and their protection in respect of shareholder rights. You see, because we have shareholders who have been appointed by, who are the owners of the firm, and they are elected management. So management, you also, the board of directors is part of management, and they are to see that the resources of the organizations are put to good use from right perspective so that the objective of the organization can be achieved. So the key objective of management is to enhance shareholder value. You see, but normally there is conflict because management would like to pursue their own agenda at the expense of shareholders. So that is why we have the agency conflict, agency cost, right? So respect of shareholders' rights. So we have various forms of what we call acts that has been promulgated over the years. And currently the company's code, which used to be Act 179, of 1963. Currently it has been revised and it's now Act 992 of 2019. That is the umbrella of all corporate governance in Ghana, corporate governance mechanisms in Ghana. But we have other acts, let's say the Securities and Exchange Commission, right? That also was promulgated in 2003, and that is Act 1728. And it's legislative instrument 1728. So that is not an act, it's an LI. And that also promulgated the Securities Industry Act 2015, that is Act 929. So we have various acts, such as the listing rules of the Ghana Stock Exchange. We have the Code on Trade Takeovers and Mergers, Takeover Code. So the Takeover Code regulates takeovers and mergers. It regulates takeovers and mergers. And then the Sex Code of Best Practices on Corporate Governance. So these are all corporate governance tools or documents that must guide companies in their corporate governance activities. For example, the Securities Industry Act, right, which was enacted in 2016, regulates and promotes the growth and development of an efficient and transparent securities market, right, in which investors and the integrity of the market are protected. That is the objective of the Securities Industry Act. So all of them have objectives that must be achieved. So if companies are run based on these regulations, then we could achieve high corporate governance. In fact, if corporate governance is weak, then it suggests that the organization might be collapsing or might fail and may not be able. For example, we have banks that have failed, right? The recent bank failures in Ghana are as a result of combinations of factors, such as regulatory lapses. The Bank of Ghana, actually, we don't know whether regulatory was effective. Regulations were not effective, that is supervision. But the core of the whole failure was as a result of ineffective corporate governance. So over the years, there has been a lack of corporate governance and risk assessment in banks in Ghana. There has been such lapses over the years. For example, capital adequacy and then related party transactions. These two components were cited as the leading or as leading to the collapse of, let's say, UT Bank and Capital Bank. UT Bank, for example, had certain duties and obligations it had to comply with, right? For example, reporting or submitting annual financial statements to the Bank of Ghana and the SEC. But this requirement was not met. UT Bank could not provide financial statements, you see, and that was in contravention to the Securities and Exchange Commission and the Ghana Stock Exchange listing requirements. Okay, so these are corporate. It suggests that corporate governance practices in Ghana has been poor these days. And you are sitting here, you are also going into the corporate world. You must make sure you need to exercise some of these rights and ensure that organizations could be improved in terms of performance. All right. So, principles of corporate governance in Ghana. They actually lay solid foundation for management and oversight. Yes. So when you have your internal control systems in place, then management will act based on those internal controls that the organization has. Then you know that every corporate governance, there should be a board. So the corporate governance actually structures the board. And one of the key objectives of corporate governance is to add value. See, so that is why we are saying that the shareholders' wealth must grow. Shareholder are expected to have growth in their wealth, what they have contributed to the resources of the organization must grow. You see, and they can only do this by following these corporate governance principles. Act ethically and responsibly, right? Ethical, if you don't follow ethical behavior, you don't act responsibly, then you are not making corporate governance to be effective. You safeguard integrity in financial reporting. And you know that the AIS basic objective is to generate information which is in the form of financial reporting to users. So how integrity is the information that is generated to users? We all understand the word integrity. So something that we can actually rely on, something that has not been, there are not foreign materials, you see. So you need to safeguard the integrity of financial reporting. Make timely and balanced disclosure. All transactions must be duly disclosed in the financial statement. You need to respect the rights of security holders, recognize and manage risk, and then remunerate fairly and responsibly. So all these are corporate governance principles that happens in Ghana. All right. So let's look at our objective 2. So objective 2 says that we have to explain what is meant by IT governance. We have to explain what is meant by IT governance. Okay. So information technology governance, as I've already indicated, is a subset of corporate governance, right? So IT governance is a broad concept, actually, relating to the decision rights and accountability for encouraging desirable behavior in the use of IT. Desirable behavior in the use of IT, right? So we know that this IT governance came out from the Sarbanes-Oxley Act, or what we normally call the SOX. So although it is important, although not all elements of IT governance have been captured by the SOX, and most of them are in the COSO framework, which we'll be looking later. So we say that IT investment is significant and increasingly being incorporated into organizations. I've already said this. But these days, all organizations happen to be using IT. So there has been heavy investment in IT. But even as to whether IT leads to, or investment in IT leads to enhancing profitability, that has been debatable in the literature. But some of the investment organizations have simple websites, basic e-commerce and electronic communication systems. And also we have advanced, some have advanced, that is using the ERP systems. You see, but when we say IT governance, then we can group these into 3 main activities. For example, organizing the structure of the IT function, structure of IT function. Who is the head of IT? Who is the programmer? Who is the processing data? Who processes IT or data in respect to IT, and so on. So we look at the structure. Then you have governance relating to the computer operations. So what we call the physical operations of the computer, the hardware, where computer has been located or installed, and so on. And then finally, we have governance relating to natural disasters. So how to recover from disaster planning. You have to plan for disaster recovery. There are some disasters which you cannot have control. For example, when we look at this situation now, this is not in relation to our topic, but you can see that this is a global issue that we need to take measures, and every country is making sure that we can combat this disease, you see. But we have some natural disasters such as what? Fire, earthquake, flood, and so on, which can destroy the system. And you need to have such disaster recovery planning. Okay, so I'll talk about these three measures or these three components of IT governance later. But let's look at what the slide is saying here. So IT governance centers on ensuring IT is used in a manner that is consistent with the organization strategy. You see, from the very onset, I indicated that IT governance is about relating it to decision right and accountability for encouraging desirable behavior in the use of IT, you see. So it should relate to ensuring that the organization strategy is achieved. Now, so the objective of IT governance actually is to create value by optimizing the use of organizations' resources, optimizing the use of organizational resources to produce desired benefits in a manner that effectively addresses risk. You see, so IT governance is the responsibility of the board of directors who, one, evaluate stakeholder needs to identify objectives. They must be able to evaluate stakeholder needs in order to identify objectives. And also, the board of directors must provide management with direction by prioritizing objectives. You see, they need to prioritize objectives. And then finally, the board of directors must monitor management's performance. And this specifically is a subset of corporate governance, right? And management actually is responsible for planning, building, running, and then monitoring the activities and processes used by the organization to pursue the objective that has been set by the BOD, that is the board of directors. All right. So here we are saying that the international standards, ISO/IEC 38500 2015, that is the information technology that governs information technology, that's the governance of IT for the organization. So these are the guiding principles for those responsible in organizations. That is the owners, directors, partners, executive managers, and others, for the effective and efficient and acceptable use of information technology within their organizations. You see, so that is what I've just explained. Okay, so I indicated that IT governance actually constitutes three dimensions. We'll look at that very soon. Okay, so the standard implies that management should take responsibility in three key areas. Agenda setting for IT integration into overall business strategy. Agenda setting for IT integration into overall business strategy. So if IT is to be integrated into the overall business strategy, as we can see these days, then there should be a governance for the structure of IT. And that is the first component of IT governance. Ensuring an appropriate level of investment in IT business capability, and then successful operational use of IT in routine business activity. Okay. So now, I indicated that we have 3 levels of IT governance, that is organizing the structure of the IT function, and then protecting the computer operations or looking at the computer physical environment, and also you have a disaster recovery plan. Now, each of these IT governance issues identifies risk. So there are risks that are associated with each of these IT governance issues. And then there are some elements and there are mitigation techniques that can be identified. So now let's look at the organizational structure governance of IT. And actually, you should take note that when we say governance, then we are looking at the controls that has been put in place. Now, recall that in AIS, emphasis is placed on the segregation of incompatible duties, duties that are not compatible, right? Within manual activities. So in the manual activities, for example, we separate operational tasks. You say operational tasks must be separated from processing tasks. So operational tasks should be separated to segregate the tasks of transactions. Let's say somebody who authorizes transaction, that should be separated from the processing of that same transaction. So segregation of the tasks of the transaction authorization from the transaction processing task. So this must be accomplished by 2 different people. Then again, the custody of assets. There should be somebody who takes custody of the asset. And that should be different from the record that are kept on the asset. So records, segregate record keeping from asset custody. And then 3, divide transaction processing task among individuals. So let's say somebody has make a request to purchase an item, let's say a sales request. It must come to the sales office. There should be somebody who must check for the customer's credit worthiness. It moves to another department. It goes to another department before the goods are shipped. So these processes must be segregated so that if there should be any fraud, then that must come from the collusion of 2 or more individuals. So 2 or more individuals must try to collude in order to perpetrate fraud. So in the IT environment, now this normally happens in the manual environment, right? But in the IT environment, our aim is to consolidate these activities. So we don't have where somebody must do A, somebody must do B, somebody must do C. All these activities that I've mentioned, they can be performed in a single application. So a single application may authorize, right? May process, and then may record all aspects of a transaction. So just a single application in the IT environment. But we have people who are in various responsibilities. You see, we have the system developer, we have the one who processes data, and so on. So that is where the focus will be shifting when we're talking about IT environment. So that's the focus of segregating controls will be shifted from the operational level. So this operational level is a transaction processing task that computer programs now process, right? Computer programs now process. Okay, to the high level task of the computer. Okay, so that is what the computer program perform to high-level organizational relationships within the IT function. Okay, so the interrelationships among system development. I talk about system development, application maintenance, database administration, and then computer operations activities are of particular concern. So unlike the manual system where we have segregated these duties, here we are looking at segregation of duties among the system developer, the database administrator, the data processing officer, and so on. Okay, so let's look at, I think we'll end this one here. That is what it ends. So the bottom line is that IT governance should provide assurance that first, IT investment generates the required business value, and second, that the risk associated with IT are mitigated. So that ends our first objective. But let's look at, let me take a slide, a board, and then present this structure of the IT governance. Okay, so I can draw a line. Okay, so first we have, oh my goodness, it can be a square. I think I can draw a square, right? Okay. So I don't know whether this thing, drawing a square. Okay, possible. Okay, so here we have the CEO, right? So we have the CEO. That is the IT governance structure. We have the CEO. Okay, so the CEO or the president. Oh, sorry, I'm even not using. I need to just write CEO. So this thing must go. So the CEO or the president, right? Okay. Then, okay, let me just draw it roughly. I need not. Okay, so he is the head. So under this CEO or the president, we have this one. We have the vice president in terms of vice president. My diagram is, just for illustration, so just bear with me, Okay, so this will be oh my goodness. Okay, no problem. Okay, so this will be the vice president or the deputy. All this will be under the CEO. So this is for marketing, for example. So marketing, I'm just writing M for marketing. So marketing, and this is for finance, the same vice president for finance. And then this is for IT, this is for IT, right? So IT, then administrator or administration, and then operations. Okay. So when you come to the IT, so the IT has three different positions under it, under the vice president for IT services. So you have service system development manager here, system development manager. Then so system development manager, system development manager. Okay. The thing is very difficult to write. And then we have database administrator here, database administrator. And then we have data processing manager, the one who processes data. So all these functions have been segregated, you see. Then when you come to this, it has 4 subdivisions. 4 for the data processing manager. It also has 4 divisions, 4 subdivisions. That is data control. This is for data control, and then data preparation. You see, data preparation, and then computer operations. So this is computer operations. And then we have data library. So these are all functions that have been segregated. And then when we come to the system development management, we can have 2 of them. So we have systems maintenance, you see, and then we have new systems developer. Okay, so that is what. All right. So we can have the IT governance in terms of organizational structure in this form. So we see the roles of each of them. Okay. So let me erase. Let me erase before. Okay, let me do the erasing. Erase quickly. Okay. Okay. So just have some patience. So okay. So you can listen to all that I'm saying and then put down some notes on that, because I'm unable to do everything as it should be when we're in the classroom actually. So take note about that. Okay. So we'll soon look at the computer controls, or the operations of the computer, the controls that need to be in place to ensure good corporate governance or good IT governance. Okay, I think I'm almost done. Almost done. Okay, I'm almost done. So let's go back to our slide, and then we're going back to our slide. No, no. Okay. I have to go take off this new. Okay, new slide. Let me. Okay, but this must be shared, because if I don't share it, it will not. How am I seeing this? I'm not seeing. Okay, so let me see the second. Okay, so we are on the second objective. Okay. Wow, I'm not getting how. Okay, so okay, yeah, that's it. Okay, so all right. So that's the first part. Um, we need to also look at the computer operations in terms of controls. But let's finish with the infrastructure. Okay, so like I was saying, that will be the arrangement for infrastructure for the various IT personnel. Okay, now let's look at the duties that need to be segregated, right, within the firm. Now, there are two approaches that organizations adopt. We have what we call the centralized firm. In fact, the diagram that I drew represents the centralized approach. And then we also have the distributed approach. Okay, so when you talk about the centralized system or model, then you are separating systems development from computer operations. So one, the responsibilities of these groups, for example, new system development and maintenance, and then operations activities should not be commingled. They must be separated. So the reason is that consolidating these functions invites fraud. Now, with the knowledge of an application logic, if somebody has the knowledge of application logic and then control parameters along with access to the computer operations, an individual could make unauthorized changes to applications logic during execution, and that will end up in fraud. So separating the database administrator, separating the system development from computer operations is very important. That is one of the key corporate governance mechanisms. Then again, the system administrator function must also be separated from the IT function, right? Now, the system administrator, that's the database administrator, has several duties and is responsible for a number of critical tasks that pertains to the database security. That's database security. One, you recall that when we did database system, one of the functions is that the system administrator must create database schema, what we call schema. Another function is that he must create user views, or what we call the sub schema, right? And then the key function is that he should be able to, or he assigns access authority to users. So if you don't have access, then you will not be able to use the database. And then he has to monitor database usage. And finally, he has to plan for future expansion. These are some of the functions of the database administrator. Now, separating the database administrator's functions from the system IT function is very important, because if the IT function is also that of the database administrator, it can also perpetrate fraud. Okay. Then you have to also separate the database administrator from system development, right? That is also important. And that is all of them. So we have seen how the separation is done in terms of IT governance. Okay. Now let's go to our third objective. We have to summarize the principles of the COBIT framework. As I've already indicated, the COBIT framework consolidates control standards and from many different sources. You see, it consolidates control standards from many different sources into a single framework that allows management to benchmark security control practices. So that is management, you need to benchmark, management must benchmark security control practices of IT governance or IT environment. And then users to be assured that adequate IT security and control exists. And then also auditors to substantiate their internal control opinions, see, and to advise on IT security and control matters. So that is the basic function of the COBIT framework. But we have COBIT 5. So previously, COBIT was an acronym for control objectives for information and related technology, as I've already explained. Currently used in the short form COBIT. Now, COBIT 5 builds on the previous versions. So as I said, COBIT 5 is an improvement on the previous versions. Now, organizations can rebuild. So if you already have your internal control system built on the previous COBIT, you can rebuild on previous versions. So you can rebuild to be in line with the COBIT 5. Now, the COBIT framework describes best practices for the effective governance and management of IT. You see, so COBIT 5 is based on 5 key principles of IT, 5 key principles of IT governance and management. You see, and we'll look at these 5 key principles in due course. Now, these principles help organizations build an effective governance and management framework that protects stakeholders' involved investment what stakeholders have invested in the IT, right? So that will be protected. And then produces the best possible information system, right? Okay. So this is a COBIT 5, a business framework for the governance and management of enterprise IT. And it aligns with the ISO IEC 38500 is to 2015 framework. So the ISO IEC 38,500 is IT governance behavior. It prescribes IT governance behavior. And COBIT 5 guidance on processes, that is auditable performance metrics. So COBIT 5 actually aligns with this framework. So COBIT 5 framework enables holistic IT governance and management. Holistic IT governance and management. You see, so that is why you say COBIT 5, because it comprises 5 components about IT governance and management. Now, full end-to-end business. Full end. This one, we mean that the COBIT does not just focus on the IT function, but then it incorporates all aspects of the business. So IT functional areas and IT related interests of internal and external stakeholders. So it incorporates all the functional areas of IT within the organization. That's why we say end-to-end business. So that is the first one. Okay, so principle one is that the COBIT 5 meets stakeholder needs. It meets stakeholder needs. Now, COBIT 5 can be customized. So here, when we say it meets stakeholder needs, it suggests that organizations can customize the IT function in order to create value, you see, so that it will meet their needs. You know that the IT can be procured in various forms. We have large organizations that tend to build the IT in-house in order to suit their organizational needs. So the COBIT 5 allows for this. Okay, benefits and risk mitigation for all stakeholders. And these 5 enablers, they are based on, there are 5 enablers, 5 factors that actually allow this to be achieved. So principles, policies and frameworks, processes, organizational structures, culture, ethics and behavior. So if management follows these 5 enablers, you understand, then the first objective or the first principle under the COBIT 5, that is stakeholder needs, can be achieved. The second one is that it covers the enterprise end-to-end. I think I've already explained this. So it integrates all the IT governance into corporate governance. You see, we have said that the IT governance is a subset of corporate governance. So the COBIT 5, if you are using the COBIT 5 as a framework for your corporate governance, then you are integrating all the IT governance into corporate governance. So that will enhance your corporate governance quality and also treat information and related technologies as what? Assets. You see, information is a valuable resource and it's a strategic resource which must be also protected from strategic perspective. So COBIT actually considers information as what? A strategic resource, so as an asset of the organization. So treats information and related technology as an asset. And then IT related governance and management enablers are enterprise-wide, right? For example, enablers scope, roles, activities, and relationships. And then the business process are end-to-end. That is inclusive of everything and everyone, everything and everyone. That is internal and external. So the second principle is that it covers the entire enterprise. You see, it takes a holistic view of the enterprise under consideration. Okay, the third principle is that it applies a single integrated framework. So what it does is that it aligns with other frameworks in order to generate a single integrated framework. And that would be an overarching framework for governance and management for IT by integrating with other IT-related standards, as I've already mentioned. You see, and then it aligns with relevant standards and work framework. So COBIT 5 is flexible and is able to align with other frameworks and standards. Okay. And the fourth principle is that it enables a holistic approach. I think I indicated this earlier. So in the holistic approach, it defines 7 categories of enablers. Enablers that will allow this holistic approach to be achieved. The principles, policies, and frameworks. So all these are captured in the framework. Processes, organizational structure, culture, ethics and behavior, information, services, infrastructure, and applications, people, skills, and competencies. You see, so these are 7 enablers in order to achieve a holistic view in using the COBIT framework. And the last principle is that it separates governance from management. Of course, you see, where management is not separated from governance, right? So people have their relatives on the board, and so string measures cannot be implemented, sanctions cannot be applied. So this one will clearly separate governance from management and provides a clear distinction between governance and management. So there are some organizations, they don't know that management is separated from governance, and that must be observed as such. Some organizations just lump the two together, and that is what actually brings deficiencies in corporate governance. So a systematic approach to governance and management of IT is required. You see, IT governance is a subset of corporate governance. So management of IT and governance of IT has 2 separate issues that need to be considered. Stakeholder requirements need to be evaluated, you see, and then the 5 principles enable the enterprise to build an effective governance and management framework. So when you adopt the COBIT framework, then it suggests that your corporate governance mechanisms will be improved. All right. Then the fourth objective is that we need to explain the significance of internal controls. So from the beginning of this lecture, we said that internal controls actually, they constitute the rules, regulations, policies, and the processes that are implemented to provide reasonable assurance that the organization's internal control objectives or control objectives that have been stated by the organization will be achieved. You see, so the significance of internal controls is to ensure that an organization's objectives of efficient operations, reliable reporting, and compliance with relevant laws are achieved. Without that, then the organizations will be heading towards losses and disaster. So this is an essential to an organization's corporate governance structure. You see, so internal control, internal audit, you see, they are the foundation for effective corporate governance, right? Okay. So what is internal control? And here we are thinking from the COSO perspective. COSO definition of internal control. COSO defines internal control. The definition is deliberately broad and reflects the following fundamental concepts. Geared toward achieving, it is geared towards achieving objectives in one or more categories: operations, reporting, and compliance. But the COSO framework itself has 5 components that ensures proper internal control. Okay, so a process of ongoing tasks and activities, a means to an end, not an end in itself. Okay, and then affected by people. This is not just about policies and procedures, but about people and their actions. Yes, you can have the policies in place, as we have been experiencing in an environment here. Rules are not enforced, regulations are not implemented, and so on. So they are there, but they are not being enforced. So the policies and rules, but it is the people, the actions of the people that must what? Ensure that these rules and procedures have been complied with. So able to provide reasonable assurance, not absolute assurance, as I've already indicated this from the start of the lecture, that internal control cannot give us a complete assurance because there are inherent limitations. The internal control system that has been designed itself is susceptible to simple errors and mistakes. And management can also make faulty judgments, and decisions can come from management. There is what we call the collusion, and then the management override. So able to provide reasonable assurance and not absolute assurance to the board and management. So adaptable to the organization structure for the whole organization and a subsidiary, a division, or a business process. Okay. All right. So what is internal control? COSO's framework. I already indicated that the COSO framework consists of 5 components. But let's look at the COSO framework, which outlines 3 key control objectives for internal control based on the operations, reporting, and then the compliance. So operations, we mean that the effectiveness and efficiency of business operations. The effectiveness and efficiency of business operations. So you need to get a control framework that will ensure that your business operations are effective and efficient. Reporting objectives. The internal and external financial and non-financial reporting obligations of the organization. So the AIS actually generates information to these internal and external financial reporting, internal and external users. Okay, so the internal and external reporting must conform to the regulations or the obligations of the organization. And compliance, you must adhere to laws and regulations to which the organization is subject. You see, so in Ghana here, if you are reporting, then it must be within the framework of the IFRS, of the local GAAP. Every country has a generally accepted accounting principle and so on. Okay. So that is the internal control. And for the last objective, we'll look at the components of the COSO internal control framework. Now, take note that the COSO is also a framework which was also, it also came up as a result of the fraud or the scandals that hit some giant companies in the US. way back in 2000 and 2001. Okay, so when we say the COSO framework, it has 5 components, as I've already indicated. So components of control are defined by the control framework. That is exactly what the COBIT and the COSO financial controls specify. And it consists of 5 integrated control components, right? So the first one is the control environment, risk assessment, control activities, information and communication, and the monitoring. So these are the components of the COSO internal control framework. So for the 3 control objectives to be achieved, you see, so I mentioned that there are 3 control objectives. There are 5 integrated control frameworks. So these components are actually linked to the 3 control objectives to enable them to be achieved. Now, the control environment is the basis for all internal control practices and impacts operation, your environment. So there are 5 COSO principles for control environment. You see, so these 5 are also in the control environment. So if the control environment is weak, the internal control system is less reliable. So your environment, what are the systems put in place to have an effective control environment? And then risk assessment. I indicated that risk assessment has been underestimated in Ghana's corporate governance practices. Assessment of risk is the assessment, the various risks that could inhibit the successful attainment of objectives. You see, so 4 COSO principles relating to risk assessment. We can identify 4 of them. Risk assessment process includes whether the entity has a process for. So whether you identify risk which threatens achievement of control objectives, or you estimate the significance of the risk, and then you assess the likelihood of their occurrence and then decide about actions to address those risks. Okay. And then we have control activities. And remember that in the IT control environment, we have 3 types of control: the preventive control, the detective control, and then the corrective control. I think we'll talk about this when in our second lecture. So when we say control activity, we are talking about the preventive and detective and manual or automated. Preventive or detective, as I've already mentioned, and manual or automated. So preventive control, things that we can prevent before they occur, right? And when you talk about detective, then what we can detect and prevent, you see. And then for corrective control, then we have what has already occurred, and then we are making effecting corrections. Maintain security, confidentiality, privacy, and data integrity. And then identify risk and reduce threats. So top level reviewers, physical control and segregation of duties. Okay, so here too, COSO has 3 principles relating to these activities. Okay. All right, so we are now looking at COSO's internal control framework, information and communication, as the 4th control activity, or the 4th component under the COSO framework. So information from internal and external sources to support the components of internal control. And then the COSO principles of information and communication. So the design of the information system is such as infrastructure, software, people, procedures, and data. And then information must also be communicated to the relevant people for appropriate action. So here we are talking about the control practices that are involved in the processing of information or data to generate information to users. We have internal and external sources of data. So information can come from internal source and it can also come from an external source, right? They must have control mechanisms, right? Because some information might be confidential and information is not supposed, or some quarters are not supposed to get some information, or some management level are not privy to some information. So there should be control mechanisms. So COSO principles for information and what? Communication. How do your organization generate and communicate information? There must be control approaches to this. So this must be controlled. Now, the design of the information system, actually, such as what? Infrastructure. You see, the software that is being applied, the people using the system, the procedures, and the type of data. You see, information must also be communicated to the relevant people for appropriate action. So that is the fourth component. And the last one, monitoring. So monitoring of the internal control system needs to occur regularly. The COSO framework, and who does this monitoring? And that has been recorded by the Institute of Internal Auditors, Ghana. Okay. Okay, so we also have external or independent auditor. Audit the effectiveness of internal control. I mean, this is a requirement by the Sarbanes-Oxley Act that management must assess the effectiveness and weaknesses of internal control and report. And the external auditor, you need to audit the effectiveness of internal control over financial reporting and financial statements. And you may use the COSO framework as part of the independent audit, yes, if the organization has adopted the COSO framework. And then senior management have a role to play, yes. So they are accountable for internal control, as I've mentioned. They have to assess the strengths and weaknesses of the organization's internal control. And this is a requirement by the Sarbanes-Oxley Act. And then responsible for assessing the organization's system of internal control. Yes. Okay, so in this lecture, we have looked at internal controls in relation to corporate governance practices. And then we have also looked at some frameworks that has been promulgated as basis or that organizations can or that will guide organizations in the design of internal control systems. All right, so this is the COBIT framework and the COSO framework. So we'll look at the COBIT framework in more details in our next lecture. Okay, so have a nice day.